Of TFNN. Live at TFNN. Breakout Investing. With your host, Ken Shreve.
That's right, folks. Breakout Investing on TFNN. Thanks very much for tuning in. My name is Ken Shreve. Welcome to another edition of my radio program. The number to use if you want to give me a call and talk about this market that, it looks like getting pretty healthy here. Healthy action Tuesday, Wednesday, and a pretty good session taking shape today as well. So let's talk about this market. Number is 877-927-6648. 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. It's also available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi on your smartphone browser, and you can get the stream that way. As usual, I will be going over charts on my program today. If you want to look at those charts right along with me, go to tfnn.com and tune in to Tiger TV, Channel 1, right on the homepage. And the show is archived on Channel 13 in Tiger TV. And just recently, the folks over at TFNN, tech people over there, have done a great job. You can now watch TFNN or Tiger TV programming on your smartphone. Good, clear picture. You can do that with your iPhone, your Android device. So just go to the homepage of TFNN.com for more details about that. All right, let's take a look at this market. It looked like a pretty hairy open earlier today. But we've got a bid underneath this market, which is good to see. No question about it. With about let's say about 50 minutes or so, 55 minutes left to go in Thursday's session. We've got the Dow just down a little bit, down 4 points to 12,414. The Nasdaq outperforming nicely, up 20 points or so to 2668, and the S&P 500 up about 3.5 points or so to 1280. Pretty compelling action in the Nasdaq today. First of all, volume in the market today is looking pretty good. Give a quick check over at IBD's website, investors.com. You see that volume is tracking higher, both on the New York Stock Exchange and the Nasdaq today, tracking about 15% higher than Wednesday's level. So, as I've been saying in recent shows, it's really just want to start to see subtle indications that some new money is coming in from the sidelines. Volume has been light in this market for quite some time. So it is good to see volume pick up a little bit. It's hard to say. We still may not be able to come in above average on the New York Stock Exchange and NASDAQ today, but at least there's a little bit of volume behind the gains today for the Nasdaq and the S&P 500. So let's see if we can, get a close near the highs for the third straight session for all three major averages. That would be good to see. But taking a look at a chart of the Nasdaq composite here, you can see over the past 2 days, this 50-day moving average, the 200-day moving average is the red line right here. But on Tuesday, when the Dow and the S&P 500 broke out, the Nasdaq finished in the bottom half of its trading range. It was kind of a strange day because you had percentage gains of 1.7, 1.8, 1.9 for the major averages, but the Nasdaq composite finished near its low. It was turned away at its 200-day moving average. Nasdaq closed slightly lower yesterday, finished up near its session high, but still underneath the 200-day line. Today, it's trading just a tad above it. So the Nasdaq is starting to show signs of life. Let's take a quick look at the S&P 500 and see where we're at there. Technically, the technical picture of the S&P 500 is much better. As I said, you did have a nice breakout Tuesday. The S&P 500 did not hardly give up any gains at all. Yesterday was pretty much unchanged, and right now it's up about 3 points, like I said, to 1265. So technicals on the S&P 500 don't look too bad at all. And let's take a look at the Dow Jones, and that is also looking pretty healthy here. showing price strength. So a lot to like about this market over the past 3 days. So let's see if we can continue higher into earnings season. I mentioned volume today looking pretty good, tracking about 15% higher than Wednesday on the New York Stock Exchange and the NASDAQ. Taking a look at some interesting movers today. Let's take a look at Nuance Communications. This is a name that I've mentioned off and on in the show. Good growth name. Not a 50, 60, 70% grower, but a voice recognition technology company whose technology is inside the iPhone 4S, really the leader in its field. But this is an interesting technical setup here. Shares of Nuance outperforming nicely today, up 1.9% to 26.47. Nuance looks like it could try to take out a recent high here of 26.97. It's at 26.47 right now, but pretty good technical setup here. You can see a nice rally for the stock between in the month of September and October. Came down to its 50-day moving average. Now it looks like it's intent on possibly taking out a prior high. And with the market acting as well as it is, you can't rule that out. So Nuance acting well today. Another name that popped up in my software screens, JDA Software. This is a slightly thinner name. JDAS is the ticker symbol here, but JD Software down 4 cents today to 32.68, but trading tightly, holding above its 50-day moving average after a big gap up over here. But technically, this one looks pretty interesting as well, and fundamentals at JDA Software pretty good. I think this enterprise software group. Remember when Oracle warned about their current quarter, and a lot of software makers really got hit pretty hard. I believe that was back on December 21st last year, later in the year. But JD Software continues to hold up pretty well here. Really starting to come along to Apple here, or come around to Apple, I should say. The stock is up 0.8% today, $3.44 to $416.88. Buyers have certainly come back into Apple in recent weeks. This is a stock that I was not that keen on, and frankly, I'm really not still seeing a lot of volume behind the move. But this is a company where we're probably going to see very robust growth in its fiscal second quarter. It's going to be coming out with earnings middle part of January, maybe a little towards the latter part of the month. But there was a note out today from an analyst at Pacific Crest Securities. He's saying that sales of iPads and iPhones are looking pretty good, and pretty good chance that we're going to see big beat again from Apple when it reports earnings. The current consensus estimate is for Apple to earn $9.83 a share. That's would be up 53% from the year-ago quarter. Sales up 43% to $38.2 billion. So a positive note out today from Pacific Crest Securities, talking about pretty darn good sales of the iPad and iPhone. So we'll see. We'll see how that plays out. But shares of Apple looking not too bad here. It is forming the right side of a base. So when you see a base like this form, and you see a stock moving higher in light volume, it is reason to be cautious. Really, you do want to see signs of institutional buying when a stock eventually breaks out of a base. But Apple, the high was back over in this area here, 426.70. So at 417, it's only about 9 points from its all-time high. So what you could see is Apple drift lower ahead of earnings, and then if you really start to see money come in from the sidelines, it would be good to see a heavy volume gain for Apple, and you never know, you could see a breakout try for Apple over its recent high of 426.70. Now, keep in mind that Apple normally trades about 13 million shares a day, so volume on a breakout day, you would want to see, I don't know, 18, 19, 20 million shares at a minimum for Apple. So heavy volume breakouts really have been the exception, not the rule in recent weeks, and that's what's made it difficult, for growth investors, technical fundamental investors like myself that like to buy, good volume breakouts. They really haven't been around that much. So, but Apple showing signs of life here. I think we're going to see good numbers from this company when they report later this month. Also today, retailers in the news. A lot of good stories in retailers. Some not so good. Let's take a look at some retailers that are moving today. I have not had a lot of good things to say about Ulta Beauty recently, not because I don't like its fundamentals. There's a good growth story going on here, and expansion plans, good management team. Technically, the stock was just looking like it was breaking down to me. So you had a big gap up in shares of Ulta today after the company reported very strong holiday sales, lifted its earnings outlook for the current quarter. Stock is up 4.2% to 69.15, but notice how it is trading all the way down near its session low. So despite a 4.2% gain today, it is trading near its intraday low. So there are still some sellers in this stock, but boy, the company continues to execute. You have to give it credit. Holiday same-store sales for the 7-week period starting November 13th rose 12.6%. From the same time last year. Total sales in the period rose 24% year over year to $386 million. I mentioned that Ulta did raise its earnings outlook for the current quarter. So this is a good high quality company. But let's again, we'll go over, take a look at a weekly chart for Ulta Beauty and take a look and see where this stock has been. There it is, Ulta. Okay. What I do is I put a little note on this chart. Late stage bases are more prone to fail, and that's what you have with Ulta. You can see a massive price move over the past 2.5 years or so. So you have to ask yourself the question, has the big money already been made in this stock? And I'm still leaning towards yes. Doesn't mean that it's not going to be able to successfully break out, but after a price run like this, I think, again, a pretty good argument can be made that the big money has already been made. So good news from Ulta Beauty earlier today about strong holiday sales, but whether or not it's going to be able to successfully break out and score meaningful gains from here remains very much in question. We switch back to the daily chart for Ulta, and again, you'll see that the stock is, after early strength, trading near its session low around 69.24. Other good stories in retail today. Let's take a look at Zumiez. That's ticker Z-U-M-Z, Zumiez. Okay, see that shares are up big today, $4.34. That's good for a 16.5% gain to $30.67. Same-store sales at Zumiez up 10% in December. That was above the estimate for 9.2% growth. Zumiez is a teen retailer. They basically sell sports clothing, footwear. They cater towards the the skateboarding crowds, surfing, snowboarding, motocross. But very strong numbers from Zumiez, and you can see a nice little gap up and breakout today over its recent high of $30.40. So Zumiez is a good growth name, company that is executing. Folks, when we come back, we'll talk about a few more retailers acting quite well today, and there were some misses today too that we'll talk about. You're listening to Breakout Investing on TFNN. We'll be right back.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedys and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@TFNN.com and I'll send you this free report, Pathways to Wealth. That's Steve at TFNN.com, giving you Pathways to Wealth.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone. You know what's even more impressive about the market performance today is the fact that we do have a strengthening U.S. dollar and a weakening euro, which typically isn't good for stocks. But at last check, the U.S. dollar index was down about 1% to $80.92. Looking at Tiger TV on the homepage of TFNN.com, you'll see I put up a chart of the U.S. dollar index. This is as of Wednesday's close. I don't have an intraday chart for the U.S. dollar, but you can see yesterday the dollar index closed above its 20-day moving average at 80.13, and now it's up at 80.92. So the dollar making a case anyway that it's going to firm up at the 20-day moving average. Let's take a look at the UUP, which is the Deutsche Bank U.S. dollar index bullish fund. That is currently trading at 22.63, up 23 cents or about 1% as well. So big gap up for UUP today, and its technical picture continues to look strong. And you know, again, the NASDAQ is still trading higher today. The S&P is still higher. The Dow slightly unchanged at this point, but doing pretty well in light of a strengthening U.S. dollar today. Taking a look at the currency shares, Euro Trust. Well, the euro hit a 15-month low against the dollar today. That was recently on about 1.2%. to $1.28. This is the Currency Shares Euro Trust ETF, and you'll see down 1.2% to 127.42. So it continues to get hammered, and the concerns are still out there in Euroland about the banks and their ability to raise capital, and that still could be a headwind for the market. But what we know right now, as 2012, just being in the early part of 2012, is that we had a good day for the market Tuesday, a resilient performance Wednesday, and another resilient performance today. So we say just take what the market gives you. There's some good action in some stocks today, and as I said, pretty good news in the retail sector as well. A couple of other retailers moving on pretty good December same-store sales results. Take a look at Ross Stores, ticker ROST. Big move in Ross Stores today, up close to 6%. Wow. $50.40. I show you Ross Stores because it is an example of an extended stock, and I do talk a lot about extended stocks. It's not a stock that you want to chase up here. The same-store sales growth at Ross was very strong, up 9% from December 2010. That was more than double the 4.2% estimated rise from analysts. So Ross Stores continues to execute very well. Stock's having a good day. Let's talk about a competitor here, TJX. TJX Company's having an equally strong day. Very similar chart to Ross Stores. Shares of TJX up 3% or so to 66.34, but another example of an extended stock. The same-store sales growth at TJX was up 8%. That was much better than the estimate for 2.6% growth. TJX also declared a 2-for-1 stock split. So Ross Stores, TJX, other stars in the retail sector today, but both stocks are extended, and I would not chase them. Up at current price levels. Much better to buy a stock as it's coming out of a base, as it's coming out of a consolidation. TJX and Ross have been running higher for quite some time. Always want to talk about limited brands because this is another stock that always delivers good same-store sales growth, it seems, month after month. Limited brands right now down 28 cents, 0.7% to 39.38. This stock is starting to look a little bit tired to me. Despite a great track record of execution, Limited Brands is the parent company of Victoria's Secret and also Bath and Body Works. But the growth is still there. Fundamentals are still there at this company, but this is a good reason why it's important to use technical analysis, because I don't think the stock is in buying range right here. It was not too long ago, it was trading around $43 a share. Now it's down to around $39, but it is below its 50-day moving average. And despite pretty good growth, the stock is trading lower today. So looks to me like buying demand is starting to dry up in Limited Brands. Same-store sales growth here up 7% in December versus an estimate of 5.7% growth. So another company with a good track record of execution, but stock is not participating today. And moving on, taking a look at Costco as we head into our second break. Shares of Costco down 1% today to 83.15. You can see another stock that's trading below its 50-day moving average. It is trading up near its session high. Same-store sales up 7% from a year ago, slightly below the consensus estimate. All right, folks, stick with us. We'll be right back.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your Gold Report with a free 30-day trial subscription, log on to TFNN.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Monday through Friday, 4 to 6 p.m. Eastern, the Tom O'Brien Show airs on TFNN. His show is coming up right after mine at the top of the hour, and Tom has a special webinar coming up Wednesday, January 11th at 6:30 p.m. Eastern. It's titled Learn How to Use the Tick and the Trin Index to Spot Market Bottom. So Tom always gives great webinars, and again, he is the CEO of TFNN, and his show airs Monday through Friday, 4 to 6 p.m. Eastern. Be sure to check out his webinar coming up Wednesday, January 11th at 6:30 p.m. You can register right on the homepage of TFNN.com. So we, before we headed into the last break, talking about same-store sales at Costco, and the numbers weren't too bad, but Costco is one of these retailers that's looking a bit tired. Stock is down 92 cents today to 83.15. It fell below its 50-day moving average today. It is trading up near its session high after hitting an intraday low of 82.10, but this one looks like it's ready to base for a little while. Elsewhere in the retail sector, some not great stories. Let's take a look at JCPenney. JCP on the New York Stock Exchange. That stock is getting hit pretty good, down close to 3% today to 33.89. Another example of a stock that is trading well off its lows. It hit an intraday low of 32.46, so some buyers have come back into JCPenney. Not a great start for CEO Ron Johnson. Remember, Ron Johnson came over from Apple in last year in early November to take over as CEO of JCPenney, but the company lowered its earnings guidance for the current quarter, so there are some execution issues here, but hey, longs have to be happy about the fact that the stock has battled back from its intraday low of 32.46. Again, shares now trading down $1.02 to 33.89. Some raised earnings guidance we talked about earlier in the show. Alta raised its guidance. Zumiez raised its guidance. Some good stories in retail, but there was some lowered earnings guidance as well. Just mentioned JCPenney. Also, Children's Place, PLCE. Another retailer out with same-store sales results. That stock's getting hit pretty hard today, down close to 7% to 49.41. It's trading up near its high for the day as well, but a lot of technical damage done to Children's Place today as a result of lowered fourth-quarter earnings guidance. And let's not forget about Kohl's either. This is a liquid institutional quality stock that also lowered their earnings guidance. That's ticker KSS on the New York Stock Exchange. Shares of Kohl's down close to 2% to 46.50. Common theme among many of these retailers that were down sharply early in the session. A lot of them have tried to rally back, but when you look at a daily chart of Kohl's, I mean, this is really a good example of how sometimes stock charts can flag problems before the headlines do. Remember, Kohl's was a $56 stock back in November, so not that long ago. So it goes from 56 down to 46, loses 10 bucks or so over a little more than a month's time, and then they come out and lower their earnings guidance. So there's a lot of bad news already priced into Kohl's. That could be the case, but when I look at stocks for my Ultimate Growth Stocks model portfolio, I tend to look at stocks that are expanding market share, that are showing good sales increases, good earnings increases. I tend to look at stocks that are being bought, not sold by institutional investors. Kohl's is an example of a stock that has been under quite a bit of institutional selling pressure during its recent decline. So this is not a retailer that would be on my radar, and you want to be very careful trying to catch falling knives like this. I always say the goal is to buy stocks with positive qualities, not negative qualities, and stocks that are in downtrends that are being sold by institutions typically have a lot of negative qualities. All right, you're listening to Breakout Investing on TFNN. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. In 1929, Joe Kennedy had $4 million. By 1932, he grew it into $180 million. All this during the Great Depression. The good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. How would you like the strategies that Kennedys and others use that are bulletproof against the turmoil of our economy in these fast-changing times? For the last quarter of a century, I've studied and used the secrets used by millionaires and billionaires. These are bulletproof strategies that will astonish you. I'd love to introduce you to these concepts because they will absolutely change your life. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien and host of The Trader's Edge, both seen daily at TFNN.com. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then send me an email at steve@tfnn.com and I'll send you this free report, Pathways to Wealth. That's steve@tfnn.com, giving you pathways to wealth.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Don't forget, new show on TFNN, folks. Every Tuesday and Thursday, 11 a.m. Eastern. Kate Stalter hosts the Small Cap Roundup. That is a call-in talk show as well. Same number, 877-927-6648. But Kate Stalter, new host at TFNN, every Tuesday and Thursday, 11 a.m. Eastern, the Small Cap Roundup. So I would imagine she's going to be talking about some of the under-the-radar stocks, maybe some stocks under $10, which is a popular area of the market. So be sure to tune into the Small Cap Roundup with Kate Stalter every Tuesday and Thursday. 1 hour show, 11 a.m. to noon Eastern every Tuesday and Thursday. All right. So it really has been all about the retailers today. Some good news, some bad news. It seems like there's been more good news than bad. Mentioned strong results from specialty retailers like Ulta Beauty, Zoomies. A lot of these discount retailers continue to hit the ball out of the park. Ross Stores, TJX. So good numbers there. Haven't had a chance to talk about crude oil yet. That closed today down 1.4% to 101.81 a barrel. Taking a look at the United States Oil Fund, which tracks the spot price of West Texas Intermediate Light Sweet Crude Oil. That is down 1.4% today to $39.20. It gapped up on January 3rd, so today it did actually fill that gap. So its technical picture continues to look pretty strong. And then let's take a look at the GLD. We'll get into what gold did in just a second, but the Spider Gold Trust working on a 4-session winning streak. It's up near its session high now, up $1.24, 0.8% to 157.95. You can see the 200-day moving average. It is trading just underneath that. So will it be a resistance level like it was a couple weeks ago? It bumped up against that 200-day line, was turned away. So we'll see if the GLD is eventually be able to get over the 200-day moving average, which is currently at 158.28. If it can do that, then you'd expect possibly a run to that 64 price level, which is basically where its 50-day moving average is at. All right, taking a look at what gold did today. Gold bullion, gold for February delivery was up $7.40, 0.5% to $1,620.10 an ounce. It hit an intraday low of $15.97.70 an ounce. So gold finding renewed interest. And then economic data today. Weekly jobless claims, another good reading here, down 15,000 to 372,000. The 4-week moving average of claims dropped by just over 3,000 to 373,250. That's the lowest level since June 2008. So it is pretty amazing to see this economic data that we've seen week after week. A lot of attention is still on Europe, but the economic data here, it's really been hard to find bad news, whether you're looking at jobs, personal income and spending, jobless claims, GDP, whatever's being measured. We're not really seeing any big negative surprises, which leads me to believe that we should see continued improvement in 2012. So also today, the ADP jobs data, private payrolls gained 325,000 in December. That was a big number, well ahead of expectations. That's after a 204,000 private payroll gain in November. So that data were much better than expected, and it comes, of course, ahead of tomorrow's jobs report. That's always interesting to watch. The estimate right now, at last check, was for job growth of 150,000 after a 120,000 gain in November. I think the unemployment rate is supposed to tick higher just a tad to 8.7%. So hopefully we get some good numbers from the jobs data tomorrow. Question is Tuesdays, Wednesdays, and Thursdays rally in anticipation of a good number? Do we sell the news on a good number tomorrow? Do we sell the news on a better than expected number? Well, we'll have to see. But what we know right now is that we've seen three pretty good days in a row for the market: Tuesday, Wednesday, and Thursday. Speaking of the market, let's see where we're at here with about 15 minutes left to go in Thursday's session. Dow slightly in positive territory now, up 5 points to 12,423. The Nasdaq outperforming, up 21 points to 2669, and the S&P 500 up about 3.5 points or so to 1280. So Dow is just bouncing back and forth between positive and negative territory, but all in all, not too bad a session today. I mentioned oil lower by 1.4% to 101.81 a barrel. Tesoro kind of weighed on refiners for a little while today. Tesoro is TSO. Let's take a look at TSO here in stock charts. And again, if you want to look at these charts right along with me, you can do it right on Tiger TV, right on the homepage of TFNN.com, Channel 1 specifically. So Tesoro is now down 6% to 22.56, well off its low. It hit an intraday low of 21.50. But it is down 6% to 22.56. This is another broken stock, sort of a widely held oil refiner, but they warned on fourth quarter results. The refiner said it expects a fourth quarter loss of between 55 cents to 80 cents a share. The consensus estimate was for a profit of 70 cents a share. So that number, I think, came as a big surprise to the market. But again, I mean, a technically broken stock, not a stock that I'd be interested in buying down here. And it's going to be interesting to see between now and over the next week what kind of earnings warnings, if any, are we going to hear, or is it going to be relatively quiet? I've mentioned in recent weeks I do have some concerns about fourth quarter earnings season. The results might not be up to snuff. What are companies going to say about the first quarter, the second quarter, the third quarter? Are they optimistic about economic growth? Are they optimistic about Europe? So hopefully it'll be pretty quiet in terms of earnings warnings, and who knows, we could even see some raised outlooks as well. So we'll keep our fingers crossed there and hope that a strong fourth quarter earnings season will be an additional catalyst for this market. Also in the energy space, yesterday I called into Tom's show and I kind of flagged Oasis Petroleum. This is an interesting name here. The stock is only down 4 cents today after a big move yesterday. The stock broke out nicely over 31.46. Strong presence in the Williston Basin area of Montana and North Dakota for Oasis Petroleum, but so much growth going on in the exploration and production space. I like a lot of stocks in this industry group. We'll be right back, folks. You're listening to Breakout Investing on TFNN.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, folks. Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you, folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN. Professional trader and educator. Also a regular guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN as we head into the close here. Also easy to notice today the outperformance of biotech stocks. I mentioned in the oil and gas sector, specifically in the exploration and production groups, a lot of really fast-growing E&P firms. And frankly, in the biotech sector, there's a lot of companies showing excellent growth as well. And I think a mistake that investors can make when they're investing in biotech stocks is sometimes they invest in a story and they don't really pay much attention to a balance sheet, and they invest in unprofitable companies with really not much to analyze in the way of earnings and sales growth. But there's a slew of biotech stocks out there that are making money hand over fist, and one stock that is outperforming nicely today is Alexion Pharmaceuticals, ALXN. It manufactures a very, very pricey drug that's called Soliris, which is used to treat a rare genetic blood disorder. Earlier this week, the company announced plans to acquire Inobia Pharma for about just a little over $1 billion in cash, and they're going to get a key drug from that deal to expand their pipeline. But shares of Alexion today up 3% to $72.50. Another stock that continues to show relative price strength in the market. You had a recent breakout for Alexion over 69.72. So I typically, again, as I remind you that I don't like to buy stocks when they move more than 4% or so past an entry point. So Alexion is kind of borderline here extended, but still its relative price strength and its growth prospects, for that matter, can't be ignored. Another large cap biotech that continues to look pretty strong technically here is Biogen IDEC. That stock is up close to 1.5% today to 115.36. It's approaching a little swing point here of 117.55. That's going to be its intraday high set back in early December, it looks like. So shares of Biogen coming back to life. It is forming a nice base here. Could see a breakout in this name. And let's not forget about Celgene, which is probably one of the best growth stories in biotech. It's got a huge market cap, but it continues to grow earnings nicely. Full year profit this year is expected to be up 36% from 2010. In 2012, they should grow earnings about 20%. But Celgene's a very liquid stock with an average daily volume of 3.3 million shares, a market cap of $30.4 billion, but it continues to trade pretty well as well. Stock is up close to 1% today to 68.55, and it's recently broke out over 68.25. So doesn't really look to me like the train has completely left the station here. It's trying to come out of a base and continues to trade pretty well. And finally, in the biotech space, let's look at Viropharma, VPH. Another company that shows excellent top-line growth in recent quarters. Viropharma is a company that is pretty interesting. It makes drugs for diseases that have very few, if any, treatment options, so its drugs are really known as orphan drugs, but Viropharma continues to trade so tightly. You can see this huge move that it made back in, when was that? December 14th on this day right here. And then what has it done? It has really showed good, tight, sideways trading actions. That's pretty compelling, pretty bullish price action for Viropharma in recent days. The stock is up 20 cents today, 0.7% to 28.11. So a lot of interesting action in the biotech space today. That's it for Breakout Investing today, folks. Coming up next, the Tom O'Brien Show on TFNN, 4 to 6 p.m. Eastern Time. And I hope you have a great afternoon. And my next show will be next Tuesday at noon Eastern. So have a great afternoon. And we'll talk to you next week. Take care.
Great Basin Gold is a mining company engaged in the